Hey guys, Patrick here from the Chart Report. Today we're going to be sitting down with Jeff Macke. Jeff is an expert when it comes to retail stocks, and very few people understand the mind of the consumer quite like he does. You might have seen him before on CNBC or maybe Yahoo Finance, but what makes his perspective really unique is Jeff grew up as a kid walking the aisles of Target with his father, who was CEO at the time. So he has been studying consumer habits his whole life, and with retail stocks finally catching a bid and several high-profile earnings this week, what a great time to be sitting down with an expert and digging deeper into the sector. So ladies and gentlemen, without further ado, Jeff Macke. Jeff, what's going on? It's been a while.
It's been a while, man. How you doing?
I'm doing well. I'm doing well. And listen, we're all about charts here at the Chart Report, but I know you're a friend of the charts. You can speak the language well. And I figure, it's a great time to have you on. We got a busy week of retail earnings, and you look at something like the XRT, the retail ETF, it's shaping up. It's near 52-week highs. It's got a little head and shoulders in the daily. So great time to be having you on and talking a little bit more about retail.
I speak chart, man, and some of them are getting surprisingly frisky. It's one of the groups that hasn't really caught up this year. They ran into headwind. It's one of those uncomfortable moments where you got to talk charts and fundamentals. But it's you really have this. There's, you say, near all-time highs. The old all-time highs were right where they started talking tariffs. And
Yeah.
we're on the bleeding edge of tariffs. Another reason that the industry matters so much right now, but also been a constrictor for the stocks as they try to break higher, because it's really hard to take the whole group and say, you know what, they're all paying enormous taxes. Everything they bring into the stores is going to cost more, but we're going to pay all-time highs for it. That just hasn't been kind of, you can see that in the charts, and if you're going to interpret the chart and anthropomorphize it, which is always dangerous to assume what people are thinking, but that is kind of from a fundamental side, the prevailing feeling is it's just they can't possibly be better off when they're paying 40% tariffs on bringing in shoes from Vietnam, to name yet one example. There are dozens out there.
I mean, this industry is really at the forefront of the whole tariff debate. But just to introduce you a little bit more to our audience, I just wanted to start off with a funny story. Boy, this was probably before COVID, almost probably 10 years ago. But last time I saw you present, you pitched Victoria's Secrets as a short, and I didn't take you seriously at first, if I'm being honest, because the whole your whole thesis was the CEO is kind of a creep. He's kind of a perv, right? And correct me if I'm wrong.
But it was the founders. It was built on a foundation of just kind of creepy. And at the time, then as now, the best way to sell undergarments to younger women is to provide a place that's comfortable, safe, and just kind of appealing. And Victoria's Secrets was running it like kind of it was a store attached to a Scores or something. There was just this creepy undercurrent of a vibe there to a company that is trying to sell underwear and bras to preteens, teens, and it all just was disgusting. There was an Epstein tie back then. I can see why you didn't take me seriously, because at the time this all sounded insane. There's this guy in Iowa who pays this guy, or Ohio, who pays this guy Epstein, who had an island. He's a terrible person. Epstein had a lot of input at Victoria's Secrets, which made no sense at all. He may or may not even have been a financial planner, but he certainly was not the guy who should be setting up the store base at Victoria's Secrets. And I'll be honest, it's always my policy that you can tell a lot when you shop a store, and you didn't have to dig that deep into Victoria's Secrets before you saw something just really corrupt there. It's a really strange setup to be selling kind of distasteful brands and to be using these really over sexualized. That was the dying ages of the Angels campaign. And it was, it outlived its expiration date. And so you had a few different things going on there that were broken. The fundamentals in that case really lined up, because it just still had that sort of halo effect. And I said, this chain is going down. They are in big trouble. They're offending their customer base, and they're going to lose share, which is exactly what happened. The company was a disaster, right. And then they spun off Bath and Body Works, which has done a little bit better, but Victoria's Secret still is kind of groping for a corporate identity. So, actually, I'm kind of proud of this short. I did quite a bit of work on it to the extent I could. I had to get a little resourceful in how I went about shopping the stores, but it proved to be kind of a good call. That worked out well. Thank
It was
you for remembering. It's always nice.
Yeah, of course. It was L Brands at the time, right? And how did that really end? I mean, you mentioned it a little. They had the spin-off there with Bath and Body Works, and I know they IPO'd again in like 2021, but that's seems to be straight down since. But
Yeah, it hasn't been straight down. They're it's not an unfixable situation. They have great mall space. They still have a huge amount of market share that they've been able to hold on to kind of stubbornly. The stores are much improved. They got rid of the Les Wexner impact. He was the guy. He also Abercrombie and Fitch was another company that went through its own sort of were a super creepy store base, and they got through that okay. But that really was the downfall of Abercrombie and Fitch was just these sex scandals that have no. I mean, you're selling clothing, just gross. Gross. This isn't high fashion. This is mall-based apparel that you're selling all throughout the United States. It's insane to have these shirtless guys spritzing people with cologne and have that be your store identity. That was Abercrombie and Fitch and Victoria's Secrets, as we just talked about that. It's not a coincidence that these companies both were spun off of L Brands, of the same empire run by the same people, because they had the same problems, and that worked out well. Whole new team of management in there now. But at this point now, Victoria's Secret is trying to redefine itself with consumers. And man, once you've alienated them this hard, once you've offended kind of your core customer base, it's really hard to win them back. Right. So it's a jump ball. I've tried that stock over and over again. It's cheap on a fundamental level, but really hard to trust, really hard to figure out where they're going.
Now, did you know the Epstein connection back then? I mean, that was before the public really knew who this guy was and all that.
Well, he'd been convicted, kind of, right? And so it was sort of an open, dirty secret in finance circles, particularly in retail circles. Because again, this guy, Les Wexner, was a giant. He didn't found Victoria's Secrets. He bought it and really kind of created it really from nothing. This Les Wexner, he was a tremendous merchant with, I'm not sure what was going on. But there was just kind of a poltergeist vibe of creepy going on both at Abercrombie and Fitch and Victoria's Secrets. And that was before the Me Too movement. It was before anything. So yeah, it sounded insane to be saying this stuff. But if you're selling underwear for kids on the outside of your store, and as you go into the Victoria's Secrets, and this is where I had to get creative because I had to actually work with friends to go in and check out the fitting rooms. The fitting rooms literally were just kind of like dimly lit bathroom at a strip club type of vibe to them, with all these weird sexualized energy. And again, you're selling underwear to teenagers, it's to high school kids, junior high kids. Yeah. The disconnect was just appalling, and just not something that you don't have to be sort of a pearl clutcher to understand that this isn't going to last. This is as soon as there's an alternative that's better, they're going to start taking market share. That's huge. And once those big incumbents, and especially retail, start losing market share, you saw it with Lulu, you saw it with Abercrombie recently on their second spike. Once they dominate that hard, there's no place to go. And that's why, these stocks are not ones that you fall in love with. They're stocks that you date. You don't want to stick around and just say, oh, I'm not going to get shaken out of Lulu. I owned Lululemon at $30 a share. It was one of the best trades ever. I wept a little when I sold it, but I sold it. The comps get negative. The fundamental story just becomes less exclusive and exciting, and it's time to go.
Yeah, and that's why I wanted to kick it off with that Victoria's Secrets story. I think it describes your knack for sniffing out these trends in retail before they're apparent to the general public. But what got you into markets in general and specifically retail? If you want to start it off there.
Oh, sure. And I think it speaks to how I look at the world. My dad worked at Target. He was the CEO from, I guess, 77 to 94. And it was Dayton Hudson Corporation at the time. They eventually became Target. I think that was 2000. They renamed. But we would just go to stores. And I would go to stores the way
so your father was CEO.
He was CEO. But before that, he was just a workaholic who liked to take his kids out to stores because it counted as family time. And he kind of would just, through the Socratic method, through the force of personality that you have to have, and also kind of because a good CEO can only stand for so much. And so he would obsessively go from store to store with my brother and I in the back, usually just me, And we would just walk through the stores, and my dad would lose his mind if they were messy, if the store didn't look nice, he would lose it. And that really was kind of how Target was built. He said, it's you got to go a little crazy, Jeffrey, because I want the store manager to call other store managers and say, you know what, the boss just came in and he tore me a new one, and it was the worst day of my life because my store was messy. He's like, that's the kind of story that travels. That's the kind of news that gets out there. And I still look for that in CEOs. I look for two things out of that story. One, the idea that if you walk into a store and it's dirty, it's off, the message that they're sending through their store is incorrect. Now, this isn't just on a one-off Saturday when the manager's having a bad day. You got to go to a bunch of different stores. But if the flow doesn't make sense, there's something wrong with the operation.
And what do you mean, like messy? I mean, like, other than just like boxes all over, the just traditional sense of messy. I mean, what do you look for when you walk in?
An incoherent message, if you will. It's the difference between Target and Walmart. I know we're going to, they both report this week, and that's a big story. You walk into a Target these days, that front moment when you walk into a store is huge. That sets the mood for the entire rest of the visit. And so there are just facts in retail. 90% of customers turn right when they walk into a store. Go test it. Go stand there and watch it. And I guarantee it'll be about 90%. There's all kinds of theories for why, but you know what? If you don't design your store so people can go to the right, you have a problem. And that stuff on the right better flow in a natural way. We've talked about Target a lot, but it's at Walmart right now. You walk into their stores and they put produce up front. Now, they put produce up front because produce looks really good, Pat. You get oranges, you get greens, you get light, and as long as you're stocking your produce well, you can't just put it up there. You got to have your store managers be obsessed with making sure that before the store even opens, the produce is out there looking like a neon light for customers. Just glorious, really, really kind of embraces them and sets them in the mind to go buy more stuff. Target, you walk into, and they've got what they call Bullseye's warehouse, which is kind of a cheap, flimsy display where they put discount stuff. And it's like ramen noodles, and they can't really keep the shelving in stock, and they think it's the most exciting place that they have in the store. That's horrifying to Target veterans. Target is where they invented the planogram. A big body of people, my dad included, they invented the maps that they send out to every single store in chains now, and they say, this is what your store is going to look like. And so they would send out these maps that, came right down to, we want this product on this hanger at this point in the store. Because the idea is that you walk through, and everyone used to say this in the golden age of Target, you walk in looking for, I needed a pair of jeans. And I walked out with a cart full of just stuff that I didn't even know I needed. I bought some groceries. I bought an electric portable fan. I bought a ton of pencils, just stuff. Just stuff. And a flat display TV, I had no idea I needed it. But Costco's really great at that now, where, you walk in and you better clean out your car before you go, because you're going to come home with about 50 items that you didn't expect. And that's just good retail. None of that's by accident. Every retail store you walk into is a Skinner box designed to get you to buy impulse items, stuff that you might be on the fence about, not to rip you off, but really just to kind of, hey, what goes well with that is this. The internet obviously is terrific at that. The stores have to be as well. So there's no substitute really for just putting the shoe leather in and walking through a store and checking them out and driving around to a few different ones and just see, okay, is this Bullseye's playground, for instance, incoherent mess sort of a thing they're doing? It is. Just like if you walk into Walmart, they're letting the produce do the decorating. That's an example of just how smart those guys are, right? Because you need produce. Yeah. People don't think that Walmart would be a place that would have great produce photographed really well. You're changing it every day. And by the way, if you make it part of the displays, you get the store manager's mind on it. And so if you have 9,000 stores, you send out the memo and you say, you know what, produce is in front. It better look great every single day, because there will be hell to pay if it isn't. That's fine. That's everyone's on the same page. And so if you walk into any Walmart right now, that's what it's going to look like. You'll see produce. It'll be dazzling. You walk into a Target and you're not sure what you're going to get.
It's like, it's someone like me. I walk into a store, I don't think twice about that stuff. But to your point, I mean, they're probably having company-wide emails, conversations about these little things, and
if they're not, they're lost. We talked already about the experience at Victoria's Secret,
right.
at Abercrombie and Fitch, at Target, Walmart. This is how I make my money, or at least it's the starting point of the trade. Abercrombie used to spritz people with cologne every time they walk into the store. I honestly, it was
smell that, right?
Right.
walking by the Hollister, and it's just like, oh gosh.
And when they redid that whole chain about 2017, 18, it was around the same time that I was shorting Victoria's Secrets. I was buying Abercrombie. One of the biggest questions I had is, are they going to be able to get the stink out of these stores? Are they going to be able to make them? They've got a long-term lease.
See, I'm laughing, but you're being legit. Like
I'm dead serious. Would you make a funeral home into a retailer? Probably not. Not because of the location, but because it smells like freaking formaldehyde. You have to rip it down to the ground. Nobody likes the smell of dead people, to take a very extreme example. But if you're not able to kind of fix the stores, and Abercrombie now are a very pleasant place to shop, really well laid out stores, they managed to fix that. And it went from, again, I have friends who did it, so it's just a source of endless amusement. But they used to just hire kids off the local swim team, have them stand around in sweatpant bottoms and spray people with cologne as they walked into the store, which is not sustainable, a super weird job to have. My friends who did it, for the most part, actually loved it because, you're 17, you're jacked in your job, you're getting $5 an hour to spray people with cologne and have them tell you, pose with you and stuff. But it's not a sustainable mall business model. And so you're kind of looking for the experience. People make fun of going shopping on Black Friday. When it's the Friday after Thanksgiving, when they used to have doorbusters, people would pile into the stores. I used to take my kids every year, and not because I wanted the deals, not because I wanted to be part of the chaos, but because that day is when every store is laid out exactly the way they want it to look. They put so much emphasis on it that that huge day where you got that much traffic, every store, if you get there early, is set up exactly what the chain is trying to do. And so if you think that it's kind of incoherent, if you go like the Microsoft stores, they look like every other Apple store on earth. But you can see that if you go, there and see, okay, this is what they have. This is what they're emphasizing for Christmas. Or, are they leading with price? Are they leading with style? Are there discounts on display? How are they getting people into the store, and how are they planning to generate excitement? That, you learn a lot. You go to any type of major store the day after Thanksgiving, it's a fantastic time to shop because, there's no excuses. You walk into a Target on a random Saturday, who knows what happened? We just had 3 busloads of the nursing home just came by. The places, it's all the grandma sections are sold out and scraps all over the floor.
Now half the things are behind, like, depending on where you go, half the things are behind like a lock and key. You got to hit a button. And
it's the shopping experience it was done no favors by COVID and the ensuing kind of theft wave that really racked these stores. And you're seeing it in all the problems with the pharmacy chains, the CVS's, the Walgreens. Those are really set up to be impulse buying stores for anyone who goes to pick up a prescription. So the prescriptions were the heartbeat of that store and the pharmacy and stuff. But while you're waiting for pharmacy goods, they were just really bad retailers. Well, that worked for a while, but now they can't sell any of the medicine. They can't put it on the shelves at all. They've got to put everything down to the toothbrushes behind lock and key. And so all the retail sales just fell apart at every single one of those. They could not literally do it. It used to be a place that you'd buy just all kinds of crazy stuff. If someone's going to the pharmacy, they probably don't feel well or they're waiting for a script. It's a great time to sell them, a cheap alarm clock that beams the time on the ceiling. Just the goofy kind of crap like that everyone buys from Amazon or at Five Below now used to be sold at the pharmacies. Well, once the shrink kicked in so bad after the COVID era, that was dead, and they just had all their product walking out the door. And then it just became these 50,000 square foot pharmacies where, it's all the work's being done in the back. People are picking up their scripts and they just hate shopping in the rest of the store because people just stripped them bare. And right now, depending on how much of an on and offline mix the big box stores have, it still is a problem to this day. I know we mentioned Target a lot, but they're still kind of have issues with, okay, what do we lock up? Macy's still has issues with, if we leave everything unlocked, people are just going to take the jackets off.
Right.
But does it make sense to have to find someone every time you want to try on a jacket that's over $100 because it's all wired up to the display? That's not the answer either.
Right.
What
Kind of in
the
a
answer
pickle.
seems to be is people just go to Amazon.
Yeah. Well, I mean, that's some amazing insight you must have. I mean, yeah, walking the stores with the CEO himself, and he's your father. I mean, that's stuff you can't learn in a classroom or a CFA textbook or something like that.
And I kind of went through business school and finance and everything else, and it's just easiest for me to wrap my mind around stuff that if I understand from the ground up. And so to me, Netflix, for instance, is a consumer staple. I
Right.
don't care if they call it a tech. I get it. They're doing stuff in the back, but they pretty
Whatever,
much
yeah.
figured out streaming. Their success
Right.
is not going to be based on, if we can just get a steady feed out there. Their success is going to be based on how many eyeballs they can watch. Now I can
Right.
analyze that company. That's great. That's perfect. It's because I can tell you what people like and what they don't like. To me, that's a consumer play because that's where the ultimate sale is being made. 70% of the economy in the United States is driven by GDP. That's more than any other country in the world by far, by just laughingly far. I think Switzerland is second with 50%, give or take, and no one else is even sniffing it. I mean, so
Right.
it's us and the Swiss. We are the best consumers on earth, damn it. And
Do they they have Target in Switzerland?
no, maybe that would be the answer. Maybe we'll see what they have to say on Wednesday. Target Switzerland could be the turnaround
Right.
plan
Right, there you
that's going to
go.
stick.
Sounds good for 20 points or so. But not to dwell too much on Target, but I do find it fascinating the difference in performance between Walmart and Target there. I mean, you got Walmart kind of just hovering near all-time highs there, both reporting this week. And then Target just really kind of shit in the bed there. And so I mean, it seems like they should be facing similar fundamental headwinds. So what is Walmart doing right, or is it more what Target's doing wrong, or
It's a
what
little bit of
probably
both.
combination of
And
both? Yeah.
and here's what happens in retail and why it's so tough to turn them around. I was looking at Target's SG&A, how much they spend on the stores, and that number has gone down for the last 3-4 years because they've been seeing a real margin pinch because they don't have other cash coming in. Now, if you're Walmart, they have an advertising business that's going pretty well. They slowly figured out online. They're actually making money online, which Target's not doing, which most of the discounters aren't, and they're just huge. At over 1.5 billion a day in retail sales in the U.S., they are America, and so and they're also as happens in retail, they've really been able to adopt some of that stuff that you see at the Target. The Target kind of owned, and Walmart's slowly inching into it. It's not just out here, but in a lot of places. The
You
Walmarts
mean
are
like
simply nice
their
places.
own brand? Is that what you mean?
Their own brands, their ability to kind of come up with, say, print T-shirts that are pretty wearable, pretty useful. The ability to set up the store in a way that makes people pick up more things. Years ago, Target or Walmart used to just be all about the discount, all about we are the lowest price. It's the lowest price ever you're ever going to find. The internet's kind of killed that as a way to position your store because there's always a lower price. You can always find something cheaper someplace. It's
Right.
just a matter of who you want to give your credit card to.
I still
So
remember those Walmart commercials with the rollback guy. Remember
yeah,
those?
right. which was great for a time, but they decided, and for years Target had just much better margins because they were charging people a little bit more. People will pay more for a nice store, for a nice clean place that they feel safe shopping. And that was really the difference between the two chains. Target and Walmart were formed at the exact same year, the same year as Kmart, actually 1961. And they were all formed at the same time. Kmart was formed with the idea that this Kresge guy who ran it, he wanted to be the biggest retailer in the world. So Kmart bought real estate everywhere. They paid almost no attention. If there was a toll booth that was kind of idle, they would say, why don't we sell bait and tackle out of that toll booth, and that'll drive up our revenues. Walmart was they were going to buy stores way out of town, and they had the best distribution. And Target's entire idea was we're going to go to the suburbs because rich people like a bargain too. They just don't want to shop in a crap hole. And so we're going to keep these stores clean. We're going to keep them really looking great. And we're going to provide things like they had to deal with this designer, Isaac Mizrahi, years and years ago. And they did bank with that, just ridiculous amounts of money. So did Isaac, just by providing that. I wouldn't expect to see something this nice here. Huh. That's
Right.
great. Well, now you get the same thing from TJ Maxx, Walmart starting to figure that out a little bit. They still are someplace where, riding that line between the goods are a little nicer than you think, but the stores still don't look expensive. That's a model that works really well for both Walmart and Costco. Another one that just doesn't need to make that much money on retail, but is able to provide an experience that gives a little something extra to customers. There are TJ Maxx reports this week.
Yeah, I was actually going to ask you about TJ in this same conversation.
Right.
I mean, what are they doing right? They're nailing it. That chart
They're
is
terrific.
They're right.
And you know what? The CEO dropped his own little "this is what we're going to do" thing. And I love the rules. I love the guys that can say it. And he said, I want every temp hanger to be priced so low that it seems irrational. I want the customer to say, you know what? I can't. They're for sure losing money on this blouse. And he's like, you know what the secret is? We probably are, in fact, losing money on that blouse, and I don't care because there's 9 other hangers. We want to create buzz. Exactly. We want people to find a deal, to find a real bargain in hand, and you get this kind of treasure hunting experience. Again, that was something that Target relied on. I'm a little surprised. I feel good about this. You walk out feeling a little better. Look at the deal I got, honey. You come home and you show her the nice shirt that you got. Well, TJ Maxx has been eating into that, and they've got a business model that isn't so kind of tariff dependent because they're just buying the products from mostly other retailers that can't execute. Target was a real forerunner in let's make some Target brands. 30% of their apparel and product is their own brand, which is great. Wow.
Their apparel. Yeah, but that's still
great. Well, no, it's 30% of their entire nut is Target brand. So their food, their everything. It's just what they do. But
30% of their entire sales are
$30 million a year in brands, in Target brands. They're about $106 billion company, and they do about $30 billion, give or take, in Good and Plenty, in Kate and something. It's whether it's clothes for babies or t-shirts or their own private label foods, they're crushing on that. And for years they had they were just better at private label than anyone else. They're not anymore. Walmart is really smart, and they're super huge, and they're really, really well capitalized. And so you're not going to have a lucrative little business model that Walmart's not going to steal from you pretty quick. I'll give you a recent example. During the pandemic, Target came up with, you order it and pick it up. We'll run it out to your car. Yeah, super popular. Yeah. It took Walmart about 18 months to say, what we're going to do is you're going to be able to order stuff and then we'll bring it out to your car. Target's just like, that was our idea, but it turns out you can't patent a good idea like that. It's so, you're just,
that was Target's idea.
That was Target, where they were the first guys to roll that out. Yeah,
that's right. And they'd been doing that for years before COVID, I think. And then nobody used it until they had to.
It exploded. You want to get real retail wonky. This guy, Don Byerly, who was a grocery king in the Minneapolis area, he's the one who started that. You would buy your groceries and you would hand your little placards to him, and then you drive your car around and a kid would put it into your car. He'd put it in the trunk of your car. You know why? Because it's about 4 degrees when you're buying your groceries in December and January in Minneapolis. And it was just a beautiful idea. You don't have to get out of your car. It felt great. People loved it. It took decades for that to get adopted elsewhere, but that's where that idea came from. Was we're going to be a little fancier. It's that space between getting your stuff delivered entirely that New York has been doing for a while, just because it's in certain groceries, if they're right down the street, you just send a kid with the bag and stuff. It's George Bailey and It's a Wonderful Life. It was worked for a pharmacy. He was delivering product. I didn't want to deliver to Mr. Gower. Mr. Gower, you didn't try to poison her, sir. Because George Bailey was the delivery guy. So it's not a new idea to bring product to the customer. It's just something that Amazon suddenly figured out how to make a million different George Baileys and buy a whole truck system and took it to beyond the next level into the stratosphere. Target's still looking for their next good idea. And that's a big reason that outperformance with Walmart has taken place.
Yeah. Well, listen,
it's a really long answer to the question of what happened between Walmart and Target, but that's your long form right there.
Yeah, like I said, you're dropping these nuggets that you don't get when you turn on CNBC from the retail analysts there and stuff like that. And these are really good. But retail is such a broad sector. You got everything from AutoZone to the Bath and Body Works, and it's hard to talk about it as just like this one thing. It's a great sector for long and shorts. There's usually a lot of winners and losers, even if the sector is doing well or poorly. So what are your favorite kind of stories within the retail, both your favorite and some of the least favorite?
Some of the right now we're seeing a rotation into a few of the things that haven't worked so well. You're trying to get zesty in like the Abercrombie and Fitch. They're trying to make a comeback. That's still a well-run company.
We can't not mention the American Eagle, right? The
American Eagle, absolutely. They captured some buzz. I bought that in my personal account, like right when I saw the ad. I was riding a bike and I saw the TV's ads and I thought this is a good ad, not because she's so hot. She's actually kind of covered up in it. The ad itself is an homage to a Brooke Shields ad campaign from 1980. But also, so I put that together, the fact that Levi's the week before had just reported better than expected earnings, and there's a little backlash against athleisure right now. And so you're seeing a little action happening in denim, and it's an ancient fabric. There's always talking about a denim comeback. Well, this year you're finally starting to see sales. Levi, it's perfectly cromulently managed. It's fine. But the truth is, it's hard to move the needle there unless the actual underlying demand for denim exists. American Eagle has been an afterthought. They're still the fourth largest seller of denim in the United States. So it matters a lot. If they're about 40% of their product is going to be denim related. And so if denim's selling better than expected, American Eagle's probably going to be fine. You couple that with, we're part of the cultural conversation. Now, I had no idea there's be something that presidents would be talking about, and that's a little too far for my, as a shareholder, I would just like it to be in the op-ed pages occasionally and have people say, wow, but the takeaway of that ad is you wouldn't normally put, she's not unattainably built. She looks nice in denim. This is kind of an outfit that looks good on people. And to the point that everyone started salivating like a bunch of fraternity idiots. But that wasn't the point of the ad. The point of the ad is that American Eagle is going to sell more denim than expected this fall, simply because they've gotten this much attention. And at the end of the day, people can still look good in those kind of jeans. Sydney Sweeney is a 5'3" person. They didn't show her chest. There's no reason to get super body about this, but it's not a body that normally you would stick in denim. They went with kind of a retro concept, and it was an ad that I knew would get conversation. And so, it's not the kind of stock you come out and pound the table on, because it's not particularly well managed, and it's kind of not been particularly well managed for quite a while. I sort of think of it as Abercrombie's like near to well brother.
Right after the announcement, I think it had like a 20% pop. It's probably up more than that by now, but
it's been kind of building on it.
You zoom out though, and it's just, that chart is like the range from hell. That's like ever since
absolute range from hell.
Whatever it was, like 2015 or 2005.
I was talking with Spencer about it that week, actually, because that chart kind of goes down to about $10 and has since the late 90s, which is bonkers. But that's where it was before they came out with this quarter. And, it is just not been a kind of company that you want to really invest in on the long side, mostly in large part because they don't do that much very well on the other side of things. And if denim isn't growing, they have a problem, because it's where a lot of American teenagers buy their blue jeans. They're going to sell more than expected this fall. That covers up a lot. It changes the conversation for American Eagle. And if you're American Eagle and your stock is trading at levels that it literally first hit in 1998, you want to change the conversation. You want to talk about something other than, this is how we're creating long-term value. Because you are not, in fact, creating long-term value. You need to it's a stock that people have traded for a while, but it's not going to take much to bring them to 20. That's a super low multiple stock, really, really low multiple. Right. Another thing you're seeing is some of these
short interest too, but
just a monster short interest, and so you also have to question the short thesis, because it's not a big, huge retail secret that I'm pointing out that American Eagle stock is trading at levels it hit in 1998. Like, everyone knows that. And it's trading at the time, like almost single digits for multiple, because everyone on earth knows they're going to miss. And so, it was not really, tell me something new. Kohl's is getting kind of feisty, that ad, right? And that was just like, oh, it's a meme stock. It's a this and that. Well, you know what happened? Kohl's didn't go back down. No one's talking about Kohl's anymore. It just I think that's a lot of these are really rate sensitive stocks.
It's just kind of a short covering. You think it's that?
No, I think it's just a company that didn't have to be that bad. Stocks to me I like it when the charts, the fundamentals, and the narrative all line up. I think of it as like a Venn diagram, and when all three of those are locked in, when you have a good story that you can sell to brokers. For instance, American Eagle is going to sell a lot of denim. It turns out they're the fourth largest denim maker or seller in America, and 40% of their product is denim. Them selling more denim fixes a lot of those problems if it's trading at 9 times earnings, because it's going to be, it should be higher. It simply should be higher because it's going to be 7 times earnings after they don't miss for the first quarter in a long time. That's a great narrative. It's really cheap fundamentals, and the technicals looked worth a shot. That was really kind of what got me interested there. But I think that you're seeing a switch into a little bit of those higher risk names, in part because if there's a rate cut, they all do really well. You've got a debt kicker in a lot of them. Peloton's a consumer name. I don't care what anyone calls it. It is to me. That stock has done well. Stitch Fix is something that I've been looking at. Real. They've done pretty well.
Real was looking
right?
at them
Screaming. Left for dead.
Left for dead. Yeah, the best performing in XRT. And again, it's so hard to talk about retail as a group just because it's like in the XRT, you don't have a lot of the large cap consumer names that that we think of as like the big retailers, or I'd have to double check, but
they don't divide it into
Netflix and Spotify. Those are consumer brands.
Those are consumer plays. The mall itself, people are like, oh, it's the death of the mall. I own this company, Aritzia. It's this Canadian retailer. They're crushing. The mall's not dead. Yeah. People just are not going to the bad stores. That's how that works. So, you can't really give them up for dead. And we're doing a release on the Macke's Retail Roundup this week, where I'm going about and I'm taking a hammer to the indices and just kind of the way we group these things by sectors. I'm just going to do it myself.
Oh, it needs to be done.
So, you know what? These are stocks that the consumer drives the vote on these things. And so I'm calling them consumer stocks here, 30 of them that I'm just going to use to measure what's happening in the broad consumer. And then let's break them down. Let's look at in restaurants. We saw it's all the bowl shops got destroyed. And everyone was ready to say, oh, Americans aren't eating anymore. And Darden goes out and reports freaking, Chili's was up 25%. There's same store sales. Right. It's like, well, I'll tell you where the burrito guys went. This is not a cheap place to go.
Real quick, the bowl stores. So what's that? Like Sweetgreen, Chipotle,
and Kava. They all got hammered. They all had negative comps, and so cue the think pieces about how the consumer's dying, and this is how we know the consumer's dying, because they object to $9 burritos. Now, I'm the type of dork that listens to the Chipotle call. The reason Chipotle is dying is because they've got no sense of direction. Their CEO left to go to run Starbucks. And since then, they're the type of company that they insist that they're taking market share. Now, they had negative comps for only the second time in like decades. And they're saying, you know what, we took market share. So they're kind of propagating this story that the economy is so bad, there's no way anyone's going to do great. That's just not true. That's what companies that without a clue. There's plenty of ways for me to bet on the macro economy without getting involved with Chipotle. That is a story that's just they're broken kind of at their core. Kava's overpriced and Sweetgreen's a little bit of a fatty type of thing. Fatty, FAD. Because you look at Dutch Bros. If it's true that everyone's dying and no one's going out for anything, then why are people going through the drive-through like just grenadine? Holy crap! This stuff, like no one over 40 can even put it next to their lips. It repulses.
1,000 grams of sugar in your coffee. Yeah.
Right. But you know what? When Starbucks whines about their comps and Bros comes out and says, "Yeah, we're up like 12%," I'm not sure what the hell they're talking about. We literally like we need more drive-throughs. We need more restaurants. That's a big difference.
I want to ask you real quick about Starbucks, because we did have that as a short last year. It was a nice short, and then we ended up covering the day that CEO news came out because the stock did rip on that news. And so from kind of a fundamental viewpoint, what do you think? People seem to like that CEO. What do you think of? I haven't really looked at the turnaround plan. Is there hope for it?
Yeah, I wanted to be long. I still want to be long. I like the CEO as well. He's a guy who's got a nice message. If you go into a Starbucks now, make your order and start your stopwatch, and they'll have your order to you in 4 minutes. That's his mantra. That's what he goes out there and he's making everybody make sure that happens. That solves a lot of sort of the chaos and just, the way Starbucks really offended all its basic customers was, you make me order on the stinking app. If I don't have the app, I can't order. And even when I do use the app, half the time someone stole my order or it's just not ready. So what the hell are you doing? So they became a place where they were so committed to their membership program that you literally couldn't pay cash. Which is just like, I'm not sure what you're going for, but you're calling these memberships kind of customer loyalty driving. And I hate you right now. I absolutely, it makes me just despise you. And I wish there was another coffee place. It takes a long time to undo that. And it's going to be a while. You have a situation there where it's 35 times earnings, largely based on the amount of confidence that they have in this new CEO. But you have to change the vibe at about 20,000 units. And that's just in the US. And then you've got to go international and figure out how to do it as well. It's how's the vibe in the Starbucks? Well, they unionized, and then they spent a few years talking about whether or not people should be able to use their bathrooms. And it's the kind of place where they had a really long debate over whether or not people who are not customers can just do heroin in your bathrooms. And it's like, what the answer is to that? No, in fact, they cannot. In fact, no one can do heroin in our bathrooms. We're going to disallow that. And we're going to kick people out of their stores. That was a debate they had for like 3-4 years. And it's like, geez, guys, this answer seems obvious to me. There's a reason I don't, take my Starbucks to go and just go sit in Skid Row and drink it with the bums. Because I don't, in fact, like doing that. I don't think most of your customers do either. There's a little bit of a disconnect there. Maybe they could have fixed that faster.
You don't want to customers wait for it's their coffee too.
Right. I've compared it to the methadone clinic, where it's just like these people are working through some stuff. We're all standing in line and we're really impatient to get our fix. I've never been to a methadone clinic, but that's what I imagine it's like, is like getting a Starbucks at about 7 a.m. in Grand Central.
Well, Jeff, thank you so much for doing this. This is awesome. But before you go, where can people follow more of your work? If
Mackey's Retail Roundup on Stock Market TV. I'm right in there. We've got a portfolio. We've got indices. It's building. It's exciting. And this is the biggest time of the year for us. These next few weeks, we got Walmart, Target reporting this week. Then you get into the real trades are the kind of specialty shops. You get into the Gaps of the world. The American Eagle is going to report. Lulu is going to report. We didn't even get to Lulu. There are trades to be made and money to be made, long and short, in these things.
Well, real quick, what are your thoughts on Lulu?
I think Lulu is in a lot of trouble. I think they're in more trouble than it seems, and it's still not cheap. That doesn't mean it can't bounce. It spent years kind of bouncing higher, but they're another one who talks about the macro economy way more than they should. They're losing market share in men's to a company called Vuori, which is a private company based out here. And I'm sure you've seen it. I've seen it. Vuori just makes better stuff for men right now. They simply do. It's better than Lulu stuff. And so when Lulu complains about how the economy is really turning against them, and everyone I see in the shishi kind of clubs and at the beach and everywhere else is wearing Vuori, I guess only those are the people with jobs, Lulu, because what the hell is going on? And on the women's side, Aloe's kind of kicking their butt. And so they're losing on both ends. And that's a real issue, because they're blaming their comps and their failings on losing the macro economy, and they're really just losing their core customer, and they lost a lot of good executives. So I'd be cautious on that. That doesn't mean you can't trade it to the long side. Just don't. It's not done digesting just yet. It's when you get a moonshot like that. Athleisure is not getting more hot. If denim's picking up share, it's probably bad for your spandex.
You can date them, but you can't marry them, right?
Exactly.
Good stuff. Well, thank you so much, Jeff.
Thank you.